more weeks. Good shit, man. A week clean of weed. Awesome, bro. Awesome. No porn? Hell yeah, bro. I'm glad that you're away from that shit. Haven't choked the chicken as you should. Forgot to do the 30-minute meditation yesterday. It's okay. That was like, the 30-minute meditation was mainly to show you guys like the importance of your time, and you guys were able to see that. I have to shit. Do I have time? Not necessarily. Haven't smoked anymore. Good. 7 months, no weed or alcohol. Holy shit. Good job, bro. You ran a half marathon? Wow, nice. I've been doing my affirmations question, though. Do I have to say it with conviction and all confident? Why would you say it as it, why is that even a question, bro? Why is that even a question? Give me 1 second. I need some food. Anyways, let's get into liquidity sweeps, all right? Pretty sure Connor's AFK for today, but that's okay. I can man the ship. Oh, wait, what? Oh. Okay, cool. All right. Wait, Connor, did you film the beginning of this or no? Yeah, cool. All right, cool. Let's get into liquidity sweeps. Liquidity sweeps. Liquidity sweeps. Liquidity sweeps. First thing that we need to cover is just liquidity as a whole. Liquidity as a whole. Okay, so before we jump into this, and this might sound pretty redundant to you guys, if you guys have heard this in the boot camp or the trading transformation, but we need to go over it again. And because I'm assuming that you guys have learned this before, I'm going to go over it relatively quicker than usual. And then I'm also going to add some stuff that I haven't talked about in the boot camp or the trading transformation on liquidity. And then I'll open this up for questions for you guys, so you guys can ask about liquidity, okay? But first of all, we need to understand, what is liquidity? Liquidity. Okay, liquidity is resting orders. So that's stops and limits. Come on, man. Okay, so liquidity is buy stops, sell stops, buy limits, and sell limits. Okay, so liquidity is just resting orders. Okay, so imagine we have a chart like this. All within here, there is liquidity because orders are being filled. Okay, buy stops are getting filled, sell stops are getting filled, buy limits are getting filled, and sell limits are getting filled. Okay, there's liquidity all over the chart. Okay, why is it useful for us to know what liquidity is, which is resting orders? Because liquidity moves the market, okay, and changes its direction and causes orders to be filled. Okay, so what is it? It's resting orders, buy stops, sell stops, buy limits, and sell limits. Why is it useful? Because liquidity is what moves the market. So remember, think back to what is our goal within trading? Is it to make money? Yeah. No, idiots, okay? It's to predict where price wants to go. Okay, it's to actually accurately predict price action. And if we want to accurately predict price action, okay, we'll probably want to know what moves the market, and we'll probably want to know what changes the market's direction, and we also want to know what causes orders to be filled. Okay, because if we can figure out all of that, it's going to give us a pretty good overall view on where the market is going to go 9 times out of 10. Okay? So, we already covered what it is. We already covered why it's useful. Now, where is it? Slash, how do we find it? Okay? So let's think for a second. If we know that liquidity is resting orders, meaning orders that haven't been filled yet, but they're just pending orders, buy stops, sell stops, buy limits, and sell limits, we have to think, okay, when do most people, let's just think about retail, when do most people, or first let's think back to trends. Most of you guys know what a trend is. It moves in higher highs and higher lows. That's an uptrend, downtrend, lower highs, lower lows. Right? So when these lows get pushed underneath in a downtrend, most people, retail traders, dumb money, is probably going to go short here. They're probably going to enter into sells because they're thinking, oh, we're confirming that the downtrend is continuing, so we're just going to continue lower. Okay, so there's sell limits right here. Okay, and then what else is down here? Or sorry, we have sell stops down here. And what else do we have underneath here? We have buy limits. Why? Because there's some people who think, hey, this is going to be a reversal and price is going to keep going higher. And in order for that idea to be invalidated, if price goes under that low, that idea is invalidated. So what do they need to do? They need to sell their shares, okay, at a loss, okay? So we have people selling because price is going underneath these lows because they want to actually get in on a trade. And then we also have people selling down here because they were in longs right here, and this invalidates their trade idea. And if you guys trade futures, you guys will literally know that the way that you guys get out of positions, so like let's say you manually want to close, okay? I don't have my trade station logged in on here because I don't show my entries on the kick stream, but let's say I was logged in on my trade station and I press sell and I entered in on one contract right here. The way for me to manually close it is by clicking buy and then buying back one contract at a cheaper price, and that's how I make profit. Same thing is if we're in an uptrend. Let's say I want to buy once we push past this high. I'll just press this, buy by market. Okay, and then let's say I want to sell it back for a higher price, I would click sell. Simple as that. Okay, so when people see that it's in a downtrend and they see a low push below, what are they doing? They're selling. And when also people who are going long on this mini retrace up, when they get stopped out, what do they have to do? They have to sell their shares back. Now, same thing in an uptrend. When we push above these highs, what is happening? People are buying, people are going long because they want to enter into trades, and the people who are going short on this little move down have to buy back their short position at a higher price and in turn lose. Okay, so there's a bunch of buy orders resting above highs, and there's a bunch of sell orders resting below lows. Oh, that sounds like liquidity to me. So where does liquidity lie? Above highs and lows within the market. And you're probably thinking, how do I know what highs and lows it's above in the market? You don't know. But we just know that above every single high and above every single low is a potential draw on liquidity. Okay? And you're probably thinking, well, that doesn't really help me find a trade. You're right, it doesn't yet until we can get into our other confluences. Okay? But I want you guys to understand that liquidity that lies above highs and below lows, it moves the market by sweeping liquidity and by filling orders. And it changes the market direction by sweeping liquidity and filling orders. And it causes orders to be filled by changing the direction right? Because when orders get filled, it changes the direction of the market and it moves the market. Okay, and the trade that I took today was directly off of a liquidity sweep. And more often than not, you guys will find your trade entries are coming purely based off of a liquidity sweep, and your exits are going off of draws on liquidity. Okay? So liquidity can be used for two things, and we're kind of just writing shit down right now, but we'll get into the chart and identifying it pretty soon. Okay, so how do we use it? Well, for entries and exits. Okay, so literally it's probably one of our most useful and most... Sorry, give me 1 second. Okay, sorry. Got a text from my mother. Continuing. How do we use it? We use it for entries and exits. So this is by far probably our most useful confluence out of everything that I'm going to teach you guys. Okay, because it can be used for entries, it can be used for exits, and it's pretty much what causes orders to be filled. Okay, the market moves only to do two things: to fill imbalances and to seek out draws on liquidity, or to sweep liquidity, to sweep your liquidity. Okay, so now that we know that this is a super useful, super important confluence, let's get into how we can find it on the chart. So we already know that it resides above highs and lows because that's where buy stops and sell stops are going to be. So what do we need to do? We need to know how to identify highs and lows within the market. Okay, so again, we'll do this really quick before we go into the charts, because a lot of people are a little bit dumb and they can't understand this stuff. Okay, so what makes a high? Well, a move up, right? No, idiots. It is a move up and a move down. That's it. A two candlestick pattern. A move up and then a move down. What makes a low? A move down and a move up. Okay. A low is a move down, then a move up. Two candlesticks, one down candle and one up candle, and you take the lowest point of those two candles. And a high is a move up and then a move down, and you take the highest point of those two candles. A high is not one candle with a wick all the way up here, another candle with a wick right here, and then a down candle with a wick right here. Where's the high on this? Is it this right up here? No! It's this. Why? Because this candle was a move up, and so was this candle. So a move up, then a move up. Is that a high? No. What is a high? A move up, then a move down. This, believe it or not, this is one of the most difficult things for some people to understand. Okay, now let's show lows. Okay, let's say we have this candle, the wick all the way down there. And then we have another move down right here, candle right here. We have a move up right here with the candle right there. Okay, we have a move down, then a move down, and then a move up. Is this wick all the way down here the low because it's the lowest point of these three candles? Yeah, obviously it's not. Because it's a move down, then a move down. Is that a move down, then a move up? Does that make a low? No. Where is the low? Move down, then a move up. You find the lowest point of those two candles, it's this wick. Sweet and simple. Sweet and simple. Sweet and simple. Do, re, mi, fa, sol, la, ti, do. Okay? No. No, 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 no. Okay, so now we'll first, on the chart, get into identifying highs and lows, because again, for whatever reason, people be struggling with this one, okay? And then after that, we can identify and start looking at liquidity sweeps, and then also we can go into draws on liquidity, okay? And then I'll open this up for questions, okay? Because I know a lot of you guys already know about liquidity, but you guys are probably unsure about a lot of our confluences. And this is something that I'm changing a bit for you guys. Mastermind 3.0 is definitely the best mastermind that I've done so far because I've changed a lot of shit. Because I'm obviously realizing that pretty much everybody has watched my free content, or I'm assuming that. And in turn, I'm making it so that this mastermind builds off the free content. And there was some idiot today in the live chat that was talking about, well, isn't this the same shit as the free content? No, it is not. Okay, but anyways, let's get into identifying highs, okay? So we have a move up and a move down, okay? Matter of fact, I'm gonna invite people to talk on here. Let's see, who wants to help a brother out? This boy Lesno is always talking. How do I ask him to speak? How do I ask this dude? He might have to request. Hey, Lesno, request to speak, bruh. No, I'm actually, he's playing Fortnite right now. This dude is literally playing Fortnite right now. Let's ask somebody else that I think is active. Tucker takes trades. Tucker, you're pretty active. Would you like to speak in here? How do I ask him to speak? Come on, bruh. How do I ask this dude to speak? There we go. Okay, we'll invite Kid Huncho. Kid Huncho. Hello?
Hello?
Where's the high? On this, right here.
The high is on the second candle, the blue one,
This
right
one?
there. The other one, right there.
You're a fucking animal. I love you. Good job.
No problem.
Everyone clap it up for Kid Huncho, the GOAT. He was actually able to identify the high. Thank you for your service. Thank you for your service. Clap it up for Kid Huncho. He's going places, boys. He is going places. He identified the high. Wow. Insane execution. Now, let's go ahead and identify a low now, okay? So we identified a high in a very tricky situation because an idiot would have identified this as the high. Thank goodness we didn't choose Lesno because he was playing Fortnite. Moving forward. Let's do an easy peasy squeezy one. Move down, then a move up. Is this the low right here on this candle? Right here. No! It's this. We take the lowest point of the two candles. So move down, then a move up. The lowest point of those two candles. Same thing right here. Move down, then a move up. Cool. Lowest point of those two candles. Liquidity lies underneath lows and highs. As we can see right here, this is a bit of foreshadowing, but we see a Big Daddy pubic hair wick all the way to the downside, sweeping out this liquidity. Okay. And then in turn, what does price do? Moves higher. What else can we see here? Okay, we see a move down, then a move up. What do we see happen to that low? Big Daddy pubic hair, leg down, sweep, price moves higher. What do we see right here? Move down, then a move up. Boom. What do we see? Price sweeps that, moves higher. Okay. We're starting to get the picture. Okay. So we understand that liquidity lies above highs and below lows. Cool, cool. So now with that in mind, and also why do we even want to know that? Okay, so if we know there's a shit ton of resting buy orders above highs, and if we know there's a shit ton of sell orders below lows, how does that help smart money, or how does that help a smart trader? We kind of just gave it away with going over that super quick because I got too excited. I get horny when we talk about liquidity. It's my favorite thing to talk about. Okay? Why is that important for us? Because if there is a shit ton of people going long when we push past highs, and we know that gives us the opportunity to fill orders, what does that give the opportunity for smart money to do if they know that almost the majority of people are going to be going long, retail people are going to be going long? It allows them to fill their million contract orders of shorts to change price's direction, right? To make price go the other way. All right, so when we see price push above the high, are we instantly pressing short? No. But do we know that price has the opportunity to take out liquidity and to fill short orders so price can go lower to potentially change direction because a bunch of buy orders are getting filled here, right? Yes, because again, why do we need this here? Because if we were in an uptrend and we just filled all the short orders right here instead of above this high, price would just instantly shit the bed. And as price keeps going down and down and down, smart money, the banks, funds, okay, and all of their orders, they're greedy motherfuckers. They want their orders to be filled up here. They want the best price for their orders. But if they were just to place their million dollars worth of contracts, okay, millions of contract orders right here without taking out this liquidity, it would instantly cause price to start driving down. So they would boom, get filled here, and then price would keep moving down. Boom, get filled here, 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 but get filled here, get filled here, get filled here. And they wouldn't have a good entry. So we need to be thinking like the banks. Think like smart money. How do we do that? By seeing, wouldn't it be smart for us to get a bunch of people to go long while we go short so all of our orders can be filled up here at that bomb-ass, premium-ass price, and then we can cause price to shit the bed. Just like we did today. Yes. Okay. Same thing with shorts. So again, if we as smart money want to go long, okay, if we as smart money want price to go higher, what is something that we should do? We want to fill a bunch of sell orders so we can fill our millions of contracts of buy orders as everybody's going short at that premium price to end up ripping price. So then our orders aren't getting filled all the way up on the move up, because that would only happen if we had something like this and we didn't take out liquidity. But if we go like this, then all of our buy orders are going to be able to get filled, because if we think of how price works like a stock exchange, when, like back in the day, okay, let's think back. If you guys are in high school, if you guys have taken an economics class, you guys were taught this, okay? Or if you guys are in college, you guys were taught this at least once, even if you guys went to a shitty school. Even in Mexico, I think they teach this shit, okay? A stock exchange back in the day, if I want to buy 1 share of Apple, okay, I call someone up and I say, hey man, I'm trying to buy that shit off you. And they're holding the papers for it and they're like, I got 2 of them, okay? And you're like, well shit, I only want 1. So let me buy it. And they're like, bet. Let me call up the broker, see what price it's at. Bring. Oh, Apple's worth $5. Call up your boy. Give me a $5 foot long for that Apple share. Bet. Give him $5. He gives me the paper for it. I bought the share off of him. He had to sell it to me. The exact same thing holds true today, except we don't necessarily see that because we have all this fancy schmancy technology through brokerages, through liquidity providers, through Wall Street. But it still works the exact same way. If you are trying to buy a share of Apple, someone has to be willing to sell it to you. And the reason why we don't see this is because of brokerages and exchanges, okay? And they kind of break down that middle, they are the middleman for us, where they pretty much instantly fill our orders because there's millions of people buying and selling shares at a time, okay? That is Stock Market Explained by TJR. Okay, but with that in mind, the same thing applies to when we are day trading, to when we are trying to buy contracts and trying to sell contracts, even on a high level as if we are banks. Okay, so the same thing, banks have to do the same exact thing. So if they are trying to buy, like let's say 3 million contracts of the S&P 500, okay, and it's not actual banks doing this, this is an algorithm, okay, that's just coded. Okay, because having people do that and having people like actually on the books and in the pits, that's old school. They used to have it that way. Now it's coded. Okay, and it's beneficial to us so we can trade like the algorithm. Okay, but anyways, when we see price move down here, we can see, oh, there's a bunch of people willing to go short and there's a bunch of people going short. So in turn, smart money has the opportunity to go long. Okay, and we are going to go throughout these days worth of confluences and pretty much give you guys extra confluences like we talked about on Friday, talking about confluences and trading with a strategy. We're going to talk about how we can pair liquidity and a bunch of other confluences together to help figure out if this is a valid liquidity sweep, okay, to see if price wants to move higher. And also, we are going to figure out today how we can spot draws on liquidity for exit points, okay? So typically we find entries based on liquidity sweeps, and we find exits based on draws on liquidity. Okay, I know this might sound like a lot, and if you guys need a recap of this, that's okay. I have a shit ton of videos on this on YouTube, okay? And you guys will also have this video to look back on, okay? Because I know this is a lot of information, okay? And it's a lot of information for only an hour's worth of class, okay? And I'm gonna try and leave you guys with enough time to ask questions at the end, but we're still going here. Okay, so now that we know that a shit ton of buy orders can be filled underneath lows and a shit ton of sell orders can be filled above highs, we know that that can cause a change of direction within the market, right? We already discussed that. That can move the market. We already discussed that. And that's what causes orders to be filled. We already discussed that. So we know that this is a pretty strong confluence within the market, okay? Now, on top of it moving the market, causing orders to be filled, and allowing the market to potentially change direction, what else is this? Just like how I talked about, remember, on Friday, when I told you guys to take notes about confluences and trading with confluences, I want you guys to have that paper side by side because I'm going to, as I'm explaining these confluences, I want you guys to still have that side by side because as I'm explaining these things, you guys are going to forget the bare basics and fundamentals of what confluences are. Everything that I teach you guys on here is going to be fractal, meaning it appears on every single time frame. There are draws on liquidity on the daily time frame. There are draws on liquidity in liquidity sweeps on the weekly time frame. There are liquidity sweeps and draws on liquidity on the 1 minute time frame. There are draws on liquidity and liquidity sweeps on the 15-minute time frame. It happens on the monthly time frame. It happens. There's draws on liquidity on the monthly. There's liquidity sweeps on the monthly. I can literally show you how COVID was, well, okay, yeah, as this isn't getting posted anyway. So I can show you guys how COVID is literally, and I show this every single mastermind because I'm trying to make you guys smart, educated people on the world and change your guys' lives. I can show you guys how COVID was a complete fucking hoax and how it was just one big liquidity sweep. Let's look at the monthly time frame. We see January is when like COVID was pretty much like not even introduced really. Okay, that shit happened like low-key in March, right? When everything went into lockdown. Why did price start shitting the bed before then, right? Remember, if you guys were in high school, if you guys were in school, remember, it was supposed to be an elongated spring break. When is most schools spring break? That happens in April. Why the fuck did price just start shitting before COVID was like even announced or even talked about? Yeah, it was talked about a little bit in February. And then March, it was talked about a little bit more. But there was no reason for price to shit the bed and for everybody to be panicking like this. And then on top of that, I thought COVID was a worldwide fucking pandemic that should cause the markets to, it should be a recession if it's an actual pandemic and if it actually causes people to go into hiding for a while. And if you disagree with this, holy shit, you guys will never make it in trading. I guarantee you guys will never make it in trading. This was one of the things that opened my eyes to trading and helped me like become like a really fucking good trader is by seeing how manipulated the market is in the world and the news. Because if this doesn't show how fucking obvious this shit is, that the whole market is manipulated and the news is manipulated and the world is manipulated, I don't know what is. We have a monthly low here, a monthly low here, and a monthly low here. What was supposed to be a worldwide pandemic that lasted 2 fucking years, we were wearing masks for 2 years, was just a fucking liquidity sweep so all the rich people could get fucking loaded, could get a literally 35% discount on their favorite stocks. Like, what? We literally, like, if this was an actual, bro, like, if this was an actual real thing, it wouldn't have programmed price action. If this was an actual real thing, it should have gone lower and lower, probably back towards like 2008 highs. But like this was a real thing. Like when the housing market crashed, this was what COVID was supposed to be. This. But no, it was this. A fucking liquidity sweep. So again, that just shows that, first of all, everything's manipulated and it's manipulated for a reason, and all of us are getting played 24/7 by people that know more than us and by people that control news and media. And on top of that, it shows that it happens on every single time frame, because this was a matter of 2 months. 2 months we dump, we cause paranoia, we sweep out like literally previous year lows and cause price to just rip higher. Now let's show examples on lower time frames. Today was a perfect example of the trade that I took. Okay, and after we covered like liquidity sweeps and show how it changes direction within the market, like on that, right? We saw that price came down, took out these lows, right? Initial direction of the market down, boom, changes direction to cause the market to go up. Okay. Same thing here on NASDAQ, even weaker too, which is just so fucking ridiculous. So weak. We take out 2 monthly lows, 2 months of down, sweep, sweep, change direction, price ends up going higher. Okay, now let's show this intraday, and we'll talk about how this can be beneficial for us intraday, because that's how I trade. But again, price is fractal, so we can be using this on every single time frame. I'm going to teach you guys how I trade, and hopefully you guys can adjust it and fix it so that, or not necessarily fix it, but make it so that it works for you. Okay, so continuing. Today, almost every single market open we will have a liquidity sweep either pre-market or right around when market opens. Why? Because think about it. Smart money, banks, what do they want price to do? They want price to move in their direction. How do they make price move in a certain direction? Well, they have to fill orders. How do they fill orders? Through sweeping liquidity, through drawing towards liquidity. So that's how we find the majority of our trades, through price either drawing towards liquidity or through price sweeping liquidity and then changing direction. Make sense? I hope you guys are taking notes. This is a very important class. This is literally the building base fundamental of everything that that I'm going to teach you guys after this. Please, like, don't take this shit for granted. Even though you guys have seen this on a YouTube video before, please, like, understand this. Price either will be drawing towards liquidity because that is where they can fill orders. So they're going to be either moving price up or down to fill or draw on liquidity, or they are going to sweep liquidity to change the direction. Okay? So today it was a sweep of liquidity. We see price open and we come through and we take out these highs. What's resting above these highs? Buy orders. Everybody's willing to go long above these highs. Everybody's willing to buy. They say, "Oh man, price is going higher. We're in a bull run." Idiots. Okay? They're pressing buy when they see this high get pushed above. There's people who also were going short here who got stopped out, who in turn had to buy back their shares for a higher price for a loss. And there's also people going long. What does that give smart money the opportunity to do? Short and cause price to move down. And there's a bunch of other confluences for why price would have wanted to move down today. But understanding that price came up, took out these highs, and that's what caused smart money's orders to be filled, and that's what caused price to move down, is the first initial thing that we need to learn and understand before moving anywhere further in terms of confluences. A liquidity sweep is always going to be the start of every move. That is why it's so important to us, because we can see the start of this break of structure. Wow, we're getting far ahead here. Okay, the start of this move down was off of these orders being filled. Liquidity sweeps start moves. If we go back to that example of COVID, the pandemic, we can see that this move down was the start of the move up to move higher. We can also see when we went into a bit of recession in 2022 and 2023, we can see that right here on the weekly time frame, again, price is fractal. Price moved up, took out this liquidity, and started the move down. Again, does that mean we are shorting every time price goes above a high? No, because if we did that, like, that would be fucking stupid, because we know that price moves in higher highs and higher lows. We would get burnt every single time that price moved above a high. So that's why we need other confluences for us to understand that price is going to go lower, okay? And we're going to get into that later this week. Damn. Okay, and same thing with the downtrend, okay? So if we see price moving down, and if we just buyed every single time a low got pushed below, we would get fucked. Okay, but we need to understand that liquidity does lie above highs and it does lie below lows, and we're going to be able to use other confluences to help us identify when liquidity has been swept. Okay, damn, we're running out of time here. Okay, I'm going to talk about one last thing here. Again, man, I wish I had more time. So much to talk about once we get on the charts here. But again, price is fractal, so it happens on every single time frame. Okay? So along with liquidity sweeps causing change in directions, okay, liquidity sweeps is what causes a change in direction. So when this happens, right, we obviously see a change in direction. But also, what happens when we have something like this? Okay. And see all of these lows here. Okay, and then we have a high right here. What happens if we come up, sweep liquidity, start changing direction? Because we're changing direction, but let's say this is happening on the hourly time frame. This is a perfect example of what happened today. We sweep liquidity. Okay. Man, this is going to get complex for some of you guys, okay? And I don't want you guys to think too hard on this. Just understand that liquidity is what drives the market. Liquidity is what causes the market to change direction and is used as a magnet for price. Okay? Liquidity and imbalances. And we'll be getting into imbalances on day 3 of this week. But anyways, see here. Price comes up. Okay, we take out these highs. And we start changing direction. Where will price likely go towards once it starts changing direction? If higher time frame, let's say on the daily time frame, we are still bullish, how is it going to change direction back to the upside? It has to go towards another draw on liquidity to change direction back to the upside. So it's probably going to go down to these lows. Do we know for a fact that it's going to change direction off of these lows? No, but do we know that it has the possibility or the probability that it will be able to have the potential to reverse off these lows? Yes. And that kind of gets into where we can use it as exits, because if we enter up here, we can see, oh, price is probably going to seek out these lows because high time frame, we are bullish, so price will probably want to continue up off of that. We can also see price go lower towards, boom, another draw on the liquidity. Price can even go lower towards another draw on the liquidity. Price can even go lower towards another draw on liquidity until it can fill the orders it needs to change direction. And these lows are where we would likely be exiting. Or let's, and again, I know we're getting into a lot today. I just want you guys to absorb this information. Or let's say that this has already happened and we're already changing direction and the direction is already down. Price is already moving down and we've already seen the liquidity sweep happen. Where is price likely going to draw towards in order for it to change direction back up? It's going to seek out these lows. So what can we do? We can try and find short positions within here using our other confluences, because we know that price is likely going to draw towards these draws on liquidity, so that smart money can fill those orders and move higher. I know this is a lot today, guys, but we need to cover this stuff. And I'm gonna try, and I'm gonna show you guys the example of how that happened today as well, so we can see. And this will be it, and then I'll open up questions. And I swear to God, if you guys ask me any questions on entries or anything, we haven't even gotten close to that yet, so let's hold off on that. And let's hold off on any questions outside of just liquidity. Like literally just on liquidity. Let's only focus on questions on liquidity. I know you guys are anxious to get going and all of that, but we need to master this shit, or else everything else that I teach is like just fucking scraps. Like there's no point in even listening to it. Okay, so we see price come through, take out these highs, right? We see price changing direction, and then in turn, what does it do? It takes out, draw on liquidity, takes out, draw on liquidity, takes out, draw on liquidity, takes out, draw on liquidity. And now, what do we see price doing? We see price potentially changing direction back towards the upside. Okay? Because, because on the 4 hour, we're still technically bullish. But after taking out this, draw on liquidity and changing direction, what did we need to seek out? We needed to seek out other draws on liquidity to have the potential to fill orders, continue price in that bullish price action. Okay, I know that was a lot of information today. We're gonna go ahead and open up chat now for you guys to, damn, 1 yawn off the no caffeine. Fuck, I was doing so good. Okay, we got some questions there. Okay, pause it. Someone said, why was Lesno on Fortnite? For really? Alright. Is a wick better than a candle close above a sweep of liquidity? Not necessarily. Because there can be sweeps of liquidity with a candle closure above. A wick is typically more bearish confirmation. But there's no such thing as like a better version of it, because a close above can still be a sweep. Okay. Is the 1 hour time for if the 1 hour time frame has no near liquidity draws, are you scaling down to the 15-30 minute time frame to search for liquidity draws for an eventual sweep? Yes. Or I can scale into the 4 hour. Okay, because higher time frames hold higher power. Okay, so like today we had this get swept, but let's say that this high wasn't even here and we just had a 15-minute high right here. I would have used that instead. Okay, Caleb gave us a little picture. Nice. Based on your market experience, is there a better liquidity to look for? Like in an uptrend, is it better liquidity to enter on highs on the lows, or is it the same effect? Okay, so okay, so I'm going to teach you guys how to be able to find your overall bias for the day, pretty much day in and day out. Okay, and when you guys do this, you guys are going to understand what you guys should be looking for from the market. Okay, and once you guys understand what you guys should be looking for from the market, your overall bias purely every single time indicates what draws on liquidity you should be looking for and what direction sweeps you guys should be looking for. So if, like today, I was bearish because we were overbought and I wanted equilibrium to be hit on this 4 hour range, which it ended up getting hit. And I know that may seem like a foreign language to some of you guys, but that's okay for now. Okay, but continuing, my bias today was bearish, so I was looking for a sweep to the upside and then price to go lower, and then to have draws on liquidity to the downside, which were already ready available for me. Okay, versus if I'm bullish, I'm probably going to be looking for sweeps of liquidity to the downside and sell side liquidity to the upside for me to exit. Get me? And the bias stuff will be okay, Lesno, Fortnite gamer. Let's see here. I understand that you can catch a small trade that doesn't go with the 4 hour biases, but wouldn't it be smarter as a beginner to only trade with buy side liquidity and take trades that go with 4 hour bias? By the way, you weren't here from the start and you were playing Fortnite the entire time. Got it. Yes, it would be smart, and we're going to get into. I'm going to make, like, the mastermind is to make it, again, is to give you guys that straight and narrow path on how you guys can start taking trades literally right after this, the easiest way possible. And you're saying, wouldn't it be smarter as a beginner to only trade with buy-side liquidity and to take a trade that goes with 4-hour bias? Yes, I'm going to teach you guys how to find daily bias and pretty much how you guys are going to be able to decide what draws on liquidity to look for day in and day out. Okay. Okay, for it to be liquidity sweeps, does the high or low have to be swept by the wick or the body of the candle or both? It doesn't matter. So like for this example here, it was swept by the wick, but if price closed above it, it still could be valid, obviously, if we got the confirmations from that. Right? Okay, cool. How to find London high and London low. Why does it matter? You guys don't need that. But if you guys want that shit, I mean, I guess I'll show it to you. Okay, so London session starts at 3 and it closes at 8. Okay, and you just find the high and the low of London session. So the high of London was right here and the low of London was right here. I don't know why you wanted to figure that out, but there you go. Okay, if every high and low is considered as liquidity, or is every high and low considered as liquidity, or should we just focus on more prominent highs and lows? Every single high and low is liquidity, because technically, right, if we look at today, this is definitely the more prominent high, but that wasn't taken out. This hourly draw was taken out, right? And like within here, this was definitely the prominent low, but I mean, it eventually got taken out. But on this move down, this got taken out, this got taken out, this got taken out, but the prominent low didn't, and price ended up moving up. Okay, same thing up here. This is definitely the prominent high, but this was the high that got taken out to cause the liquidity sweep to go lower. Right, so we want to consider every high and low as a potential draw on liquidity. And again, that doesn't mean price is always going to reverse or change direction off of it, but we want to understand that highs and lows are used as draws on liquidity. For liquidity, do you want to wait for price action to close and show you where it wants to go? I would rather trade with the charts, not with my heart. That was deep, bro. That was really deep. Okay, so for liquidity, I'm assuming that you mean like, okay, do you want to wait for this candle to close? There's going to be confluences within lower time frames that can show us proof that this is already going to be a liquidity sweep from the jump. Okay. Show us more examples of liquidity sweeps. That is not for me to do. That is your guys' homework. You guys are going to find 10 examples of liquidity sweeps. Literally as simple as, oh, price pushed above a high, change direction to the downside. And, oh, price pushed underneath a low, change direction to the upside. Okay, if price closes above or below a previous wick of liquidity, is that liquidity swept? I wish I could understand that. If price close above or below previous wick of liquidity. Oh, so that was already answered. If price closes above, it doesn't matter. It can still be valid as a liquidity sweep. Understanding more and more now, which is good. Are you going to post this recording later? Yes. Why was Lesno on Fortnite? He's an addict. Is a wick better than a candle close above the sweep of liquidity? Nope. Same thing. Do we mark out every single draw on liquidity? So that's going to be answered as we get into daily bias, as we get into all of these other things, okay? But for the time being, I'm going to say yes. Okay, you mark out every draw on liquidity, but over the course of time, obviously, we're not going to be marking out every single low and every single high, right? Because that would just get fucking ridiculous, right? And then our chart would be just fucking full of like, our chart would just be full of like, it would look like this. Okay? And that's not what we want. We want clean, clear draws on liquidity. Okay? And we'll get into how we can show that, but that will come with identifying daily bias. And then from there, we'll be able to identify the high confluence draws on liquidity. But that wraps it up for today, okay? Pretty simple homework, okay? And again, if you guys understand liquidity already, that's good. Hopefully I was able to answer some of your guys' questions or clarify a couple things on it. Again, some of these confluences are going to be like going back over some of the stuff that I've already covered in free content, but I can assure you that as we get deeper into this, as we get into creating our strategy and developing a daily bias, this is going to be some shit that I don't talk about on YouTube ever. And it's not necessarily like on purpose. It's mainly just because, I mean, it's just too complicated for YouTube nerds. So we kind of keep it within here. So with that being said, that covers draw on liquidity. Hopefully you guys learned something from today. Hopefully that was beneficial for you guys. I appreciate you guys. All right. Homework is to identify 10 draws on liquidity. Okay. Please do that. Please and thank you. Okay. And then tomorrow, I believe we have break of structure. We do. Cool. And then we take a little break. We have a break, and then we cover fair value gaps on the 6th because I travel on the 5th. So on the 6th, I'll be in Miami. And then on the 7th, we cover order blocks. And then on the 8th, I might disperse some stuff. We cover equilibrium, breaker blocks, and SMT, but I might switch shit around. Okay, and that'll pretty much be like all of week 2. All right, boys. I appreciate y'all. I'll catch you guys tomorrow. Let's get into it, man. All right, boys. Peace out.